That was the first time that I hit the buttons in the wrong order. Hit go live before I hit the countdown.
It felt good. It felt like when it didn't go, it felt like I had another chance to breathe.
Well, I wonder if everyone was staring at our faces before the thing
Maybe.
started.
Oh,
We'll have to go check.
yeah, I guess so.
So it's August, but it seems like it's cooling off here. How are you guys doing? What parts of the country are you guys in?
Go ahead, Ericka.
I'm in Connecticut.
Oh, okay.
Oh, okay.
It's nice
Yeah.
and cool. Nice and cool there. Nice summer. Beautiful summer.
Yeah, it's hot and humid.
Well, I just came from the desert last week, and a few miles from Death Valley. It was pretty scary.
Yeah, 'cause my nephew used to live in Death Valley. I mean, you can fry an egg on the pavement.
Literally.
Yeah.
Yeah, I'm up in
So I do prefer hot and humid to that.
Chicago's been a great summer. It's been it got warm enough in the mid 80s. We got a couple days in the 90s, but the nights have been nice and cool, which is weird because usually it's sticky and humid and uncomfortable at night. So a little bit different, but it was a welcome change.
So those of us that are watching that are not from the Northeast, I think Zach, you may have been the only one that escaped the wildfire smoke. Did it hit you?
Not to my knowledge.
Okay. Yeah.
Didn't see any
You got a
come
little
through.
bit. You got a little bit there in Chicago, right?
We got more than a little bit. It was
Yeah.
We walked out of our office one day and I said, "Is there a plastics manufacturer burning?" You could actually smell it as if it were down the block.
Oh, goodness gracious.
Oh,
We had a lot of it here in Connecticut too.
Yeah, I see one of our participants, John, just commented checking in on Florida. Don't ask about the weather. I was just in Florida last week, John. I was in Naples. I know what you're talking about. Yeah, it's hot.
Oh, little Charlotte.
Yeah. All right. So we're here today with IOA, Insurance Office of America. We've got Jason Levin and Ericka Diaz, and I was so excited to have our pre-call, and I was like, oh man, we need to get this on tape. But these guys are super knowledgeable about a space that's rapidly evolving. So with that, why don't you guys do self-intros here?
Yeah, I'll give a quick one. My name is Ericka Diaz Joseph. I'm the cyber practice leader at IOA. I've been at IOA for about 10, maybe 11 months now. I don't know. Great company. My background is in cyber claims and cyber underwriting.
All right.
Thanks,
Well,
Matthew.
welcome.
Yeah, thank you. My name is Jason Levin. I'm a producer and risk advisor at Insurance Office of America. I work with lots of different type of businesses on several different exposures that they deal with, and cyber being one of them. I'm lucky to have experts in my organization like Ericka to help me along and make sure that our clients are getting the cutting edge products that are available and making sure that they're correctly covered and have the protection that they need.
Awesome. Well, we're happy to have you both here for sure.
Happy to be here.
Happy to be
All right,
here.
Zach, you're up.
For those of you who don't already know, my name is Zach Keeney. I am a co-founder with Fort Mesa. I'm our director of channel sales. Prior to my time with Fort Mesa, I owned my own restaurant franchise. So I bring the people process element of cybersecurity to our team. And I'm happy to be here as well.
And I guess I'm the geekiest one of the bunch here.
You're pretty good at process too, man. Don't say
Been
yourself.
been in cybersecurity a long time. in corporate America, ran my own MSP, worked with other MSPs, started my own cybersecurity practice, but started Fort Mesa to really try to impact the world in a larger way. When you're building software, we have the opportunity to take that cybersecurity experience and deliver it up to IT providers and enterprises to help them do things like prepare for getting insured.
And just one point that I want to make on that, Matt says he's the geekiest one, but I think he's the only one on the call who's owned a music festival and ran a music festival. So, come on now. Come on now.
Music's a pretty geeky endeavor as well.
Don't say music's geeky. Why is music geeky?
If music is geeky, then you and I might be up there on the geek charts together.
Yeah.
All right. Well,
I always have my drumsticks nearby.
Oh, look at that!
We'll have to introduce you to Matt Koenig.
Oh yeah, we got to put those two together. He's got he carries the drumsticks in the live stream too, right?
Yeah, he did. Awesome. Well, should we jump into the control, or did I miss
it? So on that note of geekiness, we're going to spend a few minutes talking about a geeky thing. Let me do the actual intro here. I'm really off
like me
base.
Today. Yeah.
So, service provider management. Some people call this third-party risk. In organizations that have an information space, it lives in file cabinets. It lives on your computers. Now it lives in SaaS providers like you've got Office 365 and OneDrive or Google Docs. But there's all sorts of service providers out there that are have third-party control or access to your data. They have a relationship with your data. They can impact your information security. So think about things like QuickBooks Online, right? Intuit's just like got all your financials and your account numbers, right? Your bank, and we want to trust our banks, right? They do invest a lot in security, but they've got a complete financial record of all your customers and what's flowing where, right? And in addition to that, of course, that's where your money is. We've got things like cell phone providers. These are things that people don't always think of as service providers, but I like these examples because it helps stretch our brains thinking about, okay, my business exists here. What surrounds my business in the information sphere? And should I be concerned about that security? How should I be concerned about that security? This should impact things like vendor selection. It should impact things like how much do you trust a vendor and what data should you let them have access to? And it can impact your own risk assessment or your own risk profile, which might mean you need to spend more to compensate for a vendor that's maybe not as secured as well as they should be, or it might mean you can't get insurance because you're depending on third parties that are untrustworthy. I'm going to dig in a little bit deeper here, and I'm going to look at the individual components of this area. So service provider management, we're looking at some practices defined by the Center for Internet Security's control list. It's Control 15, and it has 15.1 through 7. And these are different levels of service provider management practice that an organization that's trying to protect their security should be going through. And you'll see that there's 3 columns on the right: IG1, IG2, and IG3. And the guidance is a little more nuanced than this, but IG1 is for small organizations or organizations at low risk using very simple systems. IG2, you have your own IT. You've got maybe some customized software. You need to go a little bit deeper into your security and your management of third-party risk. And then IG3, if you're a business that is regulated by the government, there are legal constraints around how you can deal with data, or failure of your business can impact human safety. So air, healthcare, right? In those spaces, we need to go a little bit deeper here. So I'm just going to read through them, and then I would love to just hear, you guys want to share some stories about this, because I know everyone here on this call, this is an area that fills our days, right?
Well, we've
So
all got a different angle on it as
yeah,
well, which
so
I think is interesting.
15.1, like at a basic level, have a list of your service providers. I know that sounds like not a very complicated thing, but if someone asks you where your cyber risk is, where's your cyber liability, where is your information risk, if you don't have a list, you've probably never gone through the exercise of figuring out where your information even is. And we need to do this on the device and data side, but we also need to do this on the service provider side. So again, I gave those examples earlier: cell phone provider, online SaaS, right? This could be a business process outsourcer where there's not a direct data flow, from a systems perspective, but maybe you're emailing back and forth, or maybe you're sending physical things back and forth, right? And they have an impact on your cybersecurity as well. It could also be the guys that come inside your space, or women that are maybe not maybe not part of your business processes, but they're taking care of your building. And I'm thinking about the cleaners. I'm thinking about the people who take care of HVAC, right? These are all people that impact your business, and they have access to your information sphere, which does have a physical place at your office or your home. So that's IG1, the basics. Everyone should have the list of service providers, and that's easy. You can put it in Excel. You can use a product like ours. Um, don't use Post-its, right? This should be someplace that if someone asks you for the list, you can give it to them. And you should be updating it on at least an annual basis. Although I think a lot of people would argue a couple of times a year, or maybe even quarterly, would be a good time to go through and assess your vendor list. From there, if you're sort of a mid-maturity on the security scale, what you should be doing is having a policy. So how do you treat those providers? Do you assess them? Do you have guidelines for um, how to select them, right? Do you have a process that you go through when you hire someone? Like, do you do named access? Like, do you ask for people's identities before you let them in your building? And I know that sounds like a funny thing, but like a lot of companies in the world, they have the cleaners come in at night. They have no idea who they are, right? They just all share like a code, right? And your physical office has like physical laptops or desktops or whatever, printers. Um, you should absolutely have some kind of policy around how you establish those relationships. Classify them, usually by sensitivity, but there's other ways of classifying on 15.3. So this organization's highly critical, or it has access to highly confidential data. This organization's maybe a little less critical. They don't have access to sensitive data. This organization is maybe inconsequential, but go through a process where you classify them. And ideally, this is just another column on your list, right? You've already made the list of service providers. Let's write down the sensitivity, have that conversation with the people in your business. And then the final one here at the middle level is to really look at what the contractual teeth are between you and each of those providers. There's probably a contract. If there's not, you should get a contract. Um, See what those contractual obligations are. Are they required to inform you if they have a breach? Right? That's a super important question. Are they required to even protect your data? Have you signed an NDA with them? Those are the things that you should be really looking at in the contract. And then, for the very sensitive environments where, again, impact to human safety, right? Or government regulated data, which includes financial services. You need to assess those service providers, and that's where this terminology third party risk really like became a product category, right? There's companies out there that their whole job is to go assess these third party vendors, and we actually had Carla from Orpheus on here a few weeks ago, and she's in that business, and there's a lot of companies doing this, and it's really important that you evaluate your vendors to understand how safe they are. And then you also monitor them like on an ongoing basis. Like you don't just evaluate them when you hire them and then forget about them for 5 years, right? Um, and then of course, when you're done with that provider, did you terminate the contract? Did you ask them to destroy the data? Did you take away the keys? Right? Um,
Or did you just give them, or did you allow them to keep their login and not change their password?
Yeah.
Just hope they decide not to use it.
Yeah.
At which of these sections do you determine how much access they have and what they have access to?
I think that all these controls are tangled up together. And from a security control perspective, I would normally look at that in the access control section. This is really because all of those people at the service provider, they're just people, right? And yes, they're companies, but they're also people. When it comes to access control, you should be thinking about it, minimum access control, least common access, the same way you do everyone else that accesses the system. But there are some particular things that, because they're another company, these are special things you need to do because they don't work for you, right? And this is what end enterprises should be doing for their MSPs. And I know we have a lot of MSPs on the call, so I think a lot of MSPs get dragged through the proverbial muck through this process because, or they feel like they're being dragged through the muck because they don't have good answers to some of these questions, right? Particularly in the, assessing service providers. But if an MSP or a service provider has cleaned their own house, they've got it all documented, it's really easy to fly through these processes.
Sorry, Matt, but I think 15.1 is interesting because we recently did a relatively early control that was just around building an asset list altogether, or measuring and noting your assets altogether. 15.1 is a recall to that, and it's interesting to me if you want to think about it in like the largest scale, looking down. The first step here, when you're like measuring the risk level of your third-party service providers, is, again, do we even know who they are, and do we even have a list of them to look at? And the only reason I want to point it out is because a lot of the times in these hyper-technical fields, it can be spooky in where do we start. But I think the simplicity of a lot of these starting points might bring ease to those people who maybe feel, that nervousness or that fearfulness, especially when we get into control number 15 and it's a little bit more confusing. We're still starting at a very basic place. And I think that's an important note.
Yeah. If it wasn't clear when I said it in the geekiest way possible, this is not an all or nothing thing. The reason this is broken into 7 pieces is this is a maturity ladder. You start at the top. Well, this is top down, right? You start at the top and you go down and until you've improved your maturity to the point where you're quite mature. But as an organization, you may hit a point where you say, you know what, we're happy with this level of security investment, right?
Or it might be, this is the right level of security investment.
Right. Yeah. Right.
And speaking of risk, Matt, I mean, when insurance underwriters, which is Ericka's background, look at who they want to offer products to and at what price, having the type of diligence that's involved in completing the type of exercise that you just talked about is huge. People like Ericka, who would be on the underwriting side of the desk and who want to make a decision on, what account do I really want to go after? What am I comfortable with? And who do I want to have a relationship with? That type of diligence goes a very long way.
And definitely for like a lot of your audience, a lot of your clients are MSPs, they're going to definitely be highly scrutinized when they go out for cyber insurance, and vendor management is definitely going to be at the top of the list.
Matt, can I ask a stupid question? No, because I
only if you want a stupid answer.
I'm okay with a stupid answer on a Friday. I think vendor management, third-party risk, some of these things like are a step outside of that complexity level that some people are normally used to when it comes to cybersecurity and looking at their own systems. Why is third-party risk something to be considered? How can a service provider that I'm working with that has risky procedures, how can they damage my business? And why would I be worried about that as an MSP or somebody that's looking to get insurance?
So I've got lots of answers, but we've got people experienced in claims. So
yeah, I can actually give an example. And I'm going way back, so it's like 20, maybe 18, but there was a small business. They, outsourced their IT, and they did have an MSP that handled everything. The person came in and, did everything remote. The client had a ransomware. Turns out they didn't have any requirement for MFA. And so anything that infects the MSP could also then be propagated onto this client network. And that's exactly what happened. So that's just an example of ensuring that you've got the proper safeguards in place when you are outsourcing something like the security of your network.
Yeah, and that there's a lot of high profile. In my industry, we try not to use the B word, the breach word. We use the term incident. Incident is the name for something that you can quantify and understand and have like reasonable, rational actions about, right? To control the risk. Breach is the word you use when you've totally screwed up, right? But there were some high profile breaches, and I think probably everyone here, even though it was probably more than 5 years ago, remembers the Target hack, right?
Yep.
Yeah.
And that was exactly this situation where a third party had access to sensitive systems that were secured from internal risks, but were not secured from third party risks. And they even actually had MFA on their user accounts, right? Their internal user accounts, but they didn't have MFA on the third party account, and that's how an attacker was able to get in. They came in through the first. They broke into the third party. They were a facilities contractor, and then from there they had they got a hold of the password, and because there was no MFA, they got free ranging access and infected all of the credit card terminals, right? So that's one example, right? But the reality is, from a macro econ perspective, I was sitting in front of someone from Gartner, and it was nearly 10 years ago, and they were trying to talk about this idea of like the fact that like companies are either born in the cloud or they're going to be moving to the cloud, but like there's this idea of ignoring the cloud is just not going to pan out in the long term. And to emphasize the point, the example she pointed out, and I love this one, is 100 years ago, did you know most of corporate America, if they used electricity, they had departments of electricity? Can you imagine like having an electricity department in like an average company these days? It seems
really
ridiculous,
can't.
right?
You say that, Matt, but I kind of think that maybe my section of our organization feels a little like the electricity department.
Well, so there's parts of a business, and particularly the parts that are not your core value, right? When you're using IT, that 10 other companies that look exactly like you are using the exact same IT, it is sort of ridiculous actually that you're managing that yourself, right? Like someone else should just be managing that for all 10 companies. It's not like it's a competitive edge, right? And it reduces the cost for everyone and increases the quality to just move that out, right? And that's why we have electrical grids, and that's why we depend on third-party providers to manage our information sphere. But unlike the electrical grid that's regulated by the government, our industry, I feel like I'm in the IT provider industry, even though we're in vendor space. We're largely unregulated right now. So, we do just need to do our due diligence in making sure, as end customers or as service providers, that third party risk, or as we call it in CIS, service provider management, is part of our risk thinking. So with that, we're having Cyber Insurance Day.
What could be better on Friday, right?
Yeah.
Insurance.
Should we do a claim nightmare story? Do you guys claim nightmare? So do we have like let's not talk about like loss gone wrong, right? Because I think a lot of our listeners like have been through some kind of incident where they're like, oh, there was a loss event, right? But I think that you guys run into like the claim nightmare of, hey, this person bought the wrong product, or they didn't understand the product they were buying, or they misapplied, and the claim that should have been the sure thing, like just wasn't able to take care of the problem for the end customer. Like, is that you guys
like
see
a
that?
denied claim?
Yeah, that's such a great segue. The one thing about cyber insurance that I would start by saying is that it is changing all the time. There are new modules of coverage all the time. And all these insurance companies that get involved like to call these modules different things. Cyber extortion might be ransomware for somebody else. Social engineering might be phishing for somebody else. And, there's always been a coverage out there that's been available and that we've been selling to clients since I've been doing this, which is over 20 years at this point, called crime insurance. Well, where better or where would you think that something would be covered when something cyber related happens? And people say, well, I have crime insurance. Yeah, but like you just said, Matt, that's not the correct insurance. because that is more physical loss of merchandise or cash or something along those lines. But I think the misconception that, their current insurance package has what they need is probably one of the biggest misnomers out there right now. It is extremely important to have a segregated cyber insurance policy in order to make sure that you're picking up all the correct coverage parts. A lot of the providers right now, the small business insurance providers, all the way up to, providers that insure people up to $50 million sales, businesses, they will include what I would consider token amounts of coverage, or if you want to call it diet cyber liability, these little snippets that are out there. And people say, well, I have data breach. Well, I have, what I need. I have a $50,000 limit there. Maybe they don't even know their limits. But to have a separate policy gives you comprehensive protection. And if that's not something that's been looked at, it should definitely be looked at. And you brought up, some of we can all talk about the horror stories on the large, huge businesses that we hear have suffered cyber attacks. The new news is it's not just large business anymore. It's mostly small business. And that's where we're seeing these things take place. Having a partner that can identify where your system might be penetrated, and then having gone through an underwriting exercise with an insurance provider via application and requesting that coverage is a great way to start, and to figure out where your vulnerabilities are, and then to properly protect those vulnerabilities, because insurance companies have been and always will be for profit. So if they see a vulnerability, they're not going to offer coverage for that part, and it gives people an opportunity to fix that hole.
So
I actually have a claims example for what you mentioned.
Hold on. So I've heard some jargon here, some industry jargon.
Sorry.
Let's just rewind back to the beginning, which I get it, because we're deep in this space. But you talked about it's. Well, first of all, it sounds like particularly small business insurance buyers that are really bearing the brunt in terms of loss, like the size of the loss per employees in the business. I know they're at the high end, right? Per the number of employees in the business, small businesses are having the highest loss size, right? Because they have less protections in place. And large business, even though they're larger targets, they've been doing risk management exercises for a long time, right? And in the small businesses, they need navigators, and I think by default, a lot of them are going to their hometown. Whoever sponsored the Little League team, right? But whoever sponsored the Little League team may be an expert in finding a home or a car policy or a simple GL. Mm-hmm. But you mentioned something, I think you said a segregated policy, right? Mm-hmm. And I think that I know when you walk into some of these agencies, they say, well, you've got a cyber unit or a rider on your right. CGL, right? So explain what you mean by a segregated policy and why small businesses need to care.
Yeah, that's great. I'm happy you're giving me an opportunity to clarify that, because we do get a little jargony from time to time. And for more fun, I can go through insurance acronyms if we have extra time. About 1,200 of them. But that's exactly right, Matt. You might have on your business policy an identity recovery endorsement, which means some small policy language that has to do with identity recovery or data breach or cost of notification. So if you do experience a data breach, you may have a statute requirement that you notify all these people. But the depth of those coverage parts and how that policy language is constructed and the limits that are offered are not as extensive as if you have a distinct, separate cyber insurance policy in which you get broader policy language and you get higher limits. And I'll tell you, if you're dealing with a data breach and you have all your customer information on a machine, just the cost of notification and offering credit monitoring, you are now out of coverage. And you haven't even started yet, let alone the cyber business interruption. What it cost your business and customers and business because you were down for that time period, that's not a snippet on your commercial insurance policy program that you already have. If you don't have a designated separate policy, you very well may be underinsured. and badly.
Yeah, I've seen that a lot. When I was a claims adjuster at HSB, a lot of those claims were, reinsurance claims. And so I was adjusting claims for companies that had a rider on their CGL or their BOP. And a lot of times they didn't even realize that they had any coverage at all. So I've seen coverage, limits from 10,000, to 1 to 5 million. But I definitely ran into a lot of situations where, because this is just an endorsement that's been tacked on, there are just not enough limits to, pay for the full cost of forensics or the full cost of notification, for example. I actually had an insured that I felt very bad for. He had a small business, and he had that business for about 30 years, and he was in healthcare. He happened to have data for every patient he had ever served, and his limits were abysmal. Luckily, HSB partners with a lot of great, vendors, and we were able to work something out. And it turned out, after it was investigated, because not every ransomware is going to involve data access or data theft, this particular healthcare provider was lucky enough not to have to provide that notification. But they definitely walked away from that claim with a pretty hefty bill that they'd have to take care of.
Yeah. And for those of you who thought I was kidding about the acronyms that we're going with, CGL was commercial general liability, BOP is business owner's policy, and HSB is Hartford Steam Boiler. So
they're just HSB now.
BOP is also a hell of a DeBaby song, but
I didn't even hear them, Jason, because
I know.
but you're right. So it's funny, like, people get commercial general liability. It's like your basic I'm a small business owner policy. It's where you start before you start branching out against and looking at things that are specific to your business type, specific risks of your business. And the reason we get a commercial general liability policy is mostly because of the bodily item, right? And it's because is it every state in our union here requires that we take care of people that are at our places of work, right? And take care of our employees when they're on the job. And it's like $1 million is the standard starter policy, right? So small business owners are buying $1 million of bodily, right? And they think that's normal. And they feel sometimes overconfident that the $50,000 or $100,000 cyber rider is going to take care of them because, and it was an add-on, right? Because they think, well, I've only spent like, 30,000 last year on IT. 100,000 sounds like it would be plenty, but the reality is, when something that has a cyber angle on it, right, impacts your business, it can destroy it all, right?
Exactly.
They can run with your whole credit rating, all your customer lists. They can steal all of your data. They can impersonate you.
They can ruin your reputation.
They can ruin your reputation.
Your customers.
Yeah. And lots of other creative ways that attackers either learn to extract value from you, and they'll do $20 of damage to extract $1 of value, right? Or $100 of damage to extract $1 of value. Or sometimes they just don't care. They're not in the business of taking care of your systems. And then you've got the regulatory response requirements. We're talking about, you guys are following this 4-day breach notification news, right? So just imagine you've had a breach with the B word because you didn't take care of it. It's not an incident because you didn't have any plans. You didn't have the systems in place, but you realized, wow, things went bad. I wasn't taking care of it. And okay, I got to go hire the cyber person. You go call your insurer to put them on notice. Or hopefully you put them on notice, right? And maybe they'll have a pre-negotiated rate. Maybe they won't. But just imagine if you call up a cyber forensics shop and you're like, I'm about to die, right? And the government's forcing me to do a thing, and it's all on the line. And can I negotiate price with you, please? Right? I know what the forensics shops do. They're at like 10x price because they're like, they have you over 15 barrels.
Yeah.
And
at that point, if you have a problem, a cyber incident, breach, if you have that problem and that's the time that you're going to go on your phone and Google, to find out who you can call, who's going to help you right away, you're in a lot of trouble. is what it comes down to. The good specialty insurers that we're talking about in the specific cyber policies have experts that are waiting that you can talk to. And you can ask them, hey, here's what I think might have happened in our system. How do I determine whether it was a simple breach and I need to deal with it? How do I determine whether my customer information was out there and breached? How do I determine the next step and whether it was disseminated? Because that brings up a whole other statutory requirement on offering credit monitoring. That's not the time when that happens to start saying, okay, I've never thought of this before. Here's what I need to deal with. But a good cyber provider is going to have that type of service, and a good agency is going to bring you to that provider to get you a comprehensive solution.
So yeah, a lot of cyber carriers do have 24/7 hotlines where at any time at all you could call in and have access to an adjuster, and sometimes it's really important so that you can proceed with your remediation. Sometimes you have to get some permission, or not permission, I would say you have to get prior approval before you engage a vendor if you want it to be covered by the policy. And this is even on the endorsement policies that might be attached to a bot. They still have those same provisions in place. So it is important to, obviously, if you've got a business, you have at least an insurance agent. Call your insurance agent, and you might have, an endorsement, more coverage than you thought that you had initially. And certainly you're, much, much safer when you have a standalone monoline cyber policy where you've given thought to all of the different coverages and trusted, your agent to help you with all of that. Insurance is very good at helping you get out of a situation as cleanly as possible, because the last thing an insurance company wants is for you to have a data breach that results in a class action and triggers the policy and potentially costs another $1 million. Mm-hmm. So they definitely have experts in place with negotiated rates that already know how insurance works and can take you through it pretty quickly. Yeah, I've seen ransomware situations resolved in one day.
Yeah, Ericka, that's a great point, and that goes beyond cyber. I mean, if I was gonna amplify what you're saying, I would say notification to the insurance company, no matter what coverage line you're talking about, CGL, commercial general liability, property insurance, crime insurance, umbrella, whatever. One of the very important parts is making sure that your agency and carrier know that you've had an incident, and to determine whether a policy needs to be activated or notice of loss needs to be created. Because if you go too far down what would be categorized as adjusting your own claim, you're giving an insurance company a way to wiggle out. So notification is huge.
So this is good answers on why we care about insurance, and why we should maybe, I don't want to bash, an agency that just, doesn't get a lot of requests for cybersecurity, policies, but clearly having specialists has value. Yeah. But let's talk about the how people get insured. So I've got this thing up here, right? There it is. So I'm a CISSP. That means I have a risk assessor credential. The way I was trained to think about cyber insurance is it's a vehicle for risk transfer. My business, so to speak, my skill set that I've been trained in, that I've been educated in, that I'm credentialed in, is to help organizations assess and manage their risk. And there's lots of different ways of managing risk, and we get pretty geeky about it sometimes. But transferring the risk is the simplest one to do, but only if you do it right, right? So a risk transfer is when you understand your risk and you take a piece of it that you decide you don't want to own, and you, instead of doing something about it, you pay someone else to just own that risk, and it's great. And you've convinced me. But I know that our partners, our service providers, and their clients are all asking for cyber insurance, or sometimes think they're covered, and they need to be educated by their service provider. But there's a lot of difficulty in the how, because this has changed a lot just the last 2 years, right? The types of organizations that are now being long formed, the capacity that's in place for different types of, and I'm using more cyber or more insurance jargon here. The capacity, which is like these insurance industry's ability to absorb risk for a specific type of risk. It's changed a lot the last couple of years. I know that 6 months ago, people were freaked out because they were getting declined everywhere. Like people couldn't get through renewals. And from a service provider perspective, it was scary because your end client just invested all this money with you, and they thought that they'd be able to get a policy, and then all of a sudden they go out to get that a policy, and they're getting denied everywhere. So I know that the process here is something that a good agency can help you with, but let's just discuss what that process looks like. So it begins with, of course, the client looking for a renewal, right, which is not so simple because the requirements change every year. Or an organization maybe for the first time deciding they want to really take care of this in a comprehensive way. The first phone call might be to their agency, but it also equally might be to their service provider to say, I'm looking for insurance. I know this might be difficult to get. Can you help me?
Yeah.
Right? What do they need to do to prepare? What do they need before they call?
Well, I want to just address like your unique, client base. MSPs have had a really tough time with cyber insurance over the past couple of years, and it's not the same experience that I think a lot of different classes of business have been having. We've been hearing a lot, I think, in the news, or maybe just in my cyber world, about catastrophic risk, supply chain loss. These are concerns that a lot of carriers have. If a managed services provider has a ransomware that also impacts their clients, and I won't use any names, but there is some software that, that all the companies use. I mean, an insurance company could be on the hook for claims from not just the managed service provider, but all of those different clients. And I certainly saw that even as a claims adjuster, and it happens all the time. It happened with SolarWinds, for example. And SolarWinds is a great example of how when you are a managed services provider, you have this additional risk that has to be assessed. So not to get too deep, and I'll let Jason, take how you go about getting the insurance. I just want to acknowledge, I know it's been tough for MSPs. Insurance is out there, but of course, underwriters are more scrutinizing for this type of risk.
Yeah, thanks, Ericka. Insurance is definitely out there. You go back a couple of years, and I remember we had a provider of cyber insurance that we would go to quotes for, and it was like 4 questions, and that was it. And with those 4 questions, we were able to give an entire suite of coverage, very reasonably priced. Flash forward 2 years from there, and if you didn't have specific MFA, and if you couldn't answer every security questions on an 8-page application correctly, you were simply declined. And a lot of the business that I was talking about that had the 3 questions got long renewal applications that if they weren't filled out correctly, then your coverage was non-renewed. Flash forward to June, which is the first time Ericka and I saw in an insurance journal that for the first time in at least 2 years, cyber had leveled off and had a 10% decrease in what rates were being quoted. So it's all a market cycle, just like everybody's business has some sort of market cycle. I would say now there's no more 3 questions to get a quote, but unless you're specifically in the technology, cyber, SEO optimization, digital marketing, those are very long applications. But other than that, it's become very reasonable again. I think we went from one side where it's way too easy to one side where it's way too hard, and I think we kind of have a happy median right now. And insurance companies, to your point, Matt, have a little more capacity than they have. They feel like they have it under control. They've gotten a lot of the bad accounts off their books, and they're kind of rearing to go again. Having said that, there are certain things that they're not going to quote if you don't have, because no insurance company, just like, if we were talking about house insurance, homeowners, if you have a fire pit inside of your house, who wants to insure that? Nobody wants to insure that. As opposed to you have a house that's made out of cinder blocks, has a sprinkler system and everything that's needed. Everybody wants to insure that. It's the same thing with cyber insurance. If you don't have what they feel is the baseline necessity in order to keep your data and your system safe, they just won't offer coverage. But it's very important to be with an expert agency, and I'm not saying we're the only ones, but that has their finger on the marketplace. because it's changing all the time. And
So,
go ahead.
well, so I think at this point, most of our audience knows that they need help getting through this process, and they come to us because we help with the technical planning around managing internal risk. But
Yeah.
managing risk is, particularly if you have insurance, there's a shared responsibility. You need to handle things from the inside, but then the insurer will take care of their end, but they'll only take care of their end if you're taking care of your end. But those requirements are different for different types of business, right? Like
Yes.
like a healthcare business
Yeah.
is going to be different than an auto mechanic, right? Or
Exactly.
financial services is going to be different than maybe a SaaS company.
Yeah, if you're a manufacturer of bar stools, they're not going to be as worried as if you are doing SEO optimization and you're in other people's systems, doing digital marketing or whatever. The simple rule of thumb on it is if you're in the tech space, it's going to be a little more difficult than if you're not in the tech space. If you're a shoe store, it's going to be really darn easy. Maybe even if you're an accounting office, it's not that bad as long as you have some type of protection of your data. But if you're a large technology firm, it's going to be a little harder. And then it's going to get a little more complex as well, because the lines between different coverage parts, when that is your business, it becomes important to design a program that has the cyber liability, general liability, and professional liability all with the same carrier, so that you don't end up in a situation where they say, no, that's your claim, no, that's your claim. There are specialty products for media companies where the cyber and professional are together. But my point being, there's a solution for everybody out there. It's just a matter of finding the right product and finding the right underwriters.
Right, finding the right product.
No company is uninsurable, but it will be a matter of what limits and coverages and premium you'll have to get, because of course risk transfer is very important, but it's a shared responsibility, like you mentioned. And I also just have to say, because I've been a claims adjuster, we look for a way to cover the claim. A lot of insurance companies certainly are not trying to get out of paying for a claim. I know it feels like that, and I hear that a lot. And it seems intuitive, but truly we're looking for coverage, and sometimes some of the, sometimes the policy has particular wording. It usually isn't going to require something from the insured. Once you have your policy, there's your contract. We can ask for whatever we want before then to determine whether or not we're comfortable taking on this risk, but that's your contract. If one of the coverage triggers happens, you're entitled to exactly what the limits are for that.
We have a question here. Do we want to address this?
Yeah, I see that. Ryan, to answer your question, we do all lines of insurance at Insurance Office of America. Depending on what your needs are, we might have different experts for you. For instance, I write a lot of different type of business insurance policies in addition to cyber, and I reach out to experts like Erica to help me design the correct products when I have a specific need. But no, Insurance Office of America has, we insure businesses, among other things. So,
I think the second part's really important, right? Because this is something a lot of people ask. Should they be shopping for cyber the same way they shop for everything else? Like, should those be together? Is there an advantage to together?
You should have it all with the same agency, is my opinion, because you want your agent to be able to figure out where the general liability stops, where the cyber starts, and maybe where the professional liability is. It doesn't necessarily have to be the same carrier, although in some situations it does make it better. In other situations, it's better to segregate it away from carriers. Everybody's different, but it's important to recognize what the best plan is for each business. It might be wise to have your cyber with a different carrier than your general liability and your work comp, not a different agency, but a different carrier, so that God forbid something happens on the cyber front, it doesn't pollute the loss run of the rest of your policies. That's one way to look at it. Another way to look at it would be if you're a tech service firm and your professional liability and your cyber liability exposure kind of blurs together, and there might be a little bit of overlap. then you probably want that with the same insurance company, because you don't want them pointing at each other when the claim comes in and fighting for whose responsibility is what.
You could get a blended policy just on one form, miscellaneous professional liability or even technology liability together with the cyber.
Yeah.
Well, for MSPs, oftentimes that tech is combined, right?
Yeah.
Specifically MSPs, because they're in the business of like defending cyberspace, right?
Right.
But I've got a couple questions that I want to ask Ericka. But before we get into the geeky stuff, Zach, you had like a really thoughty.
I think I'm about to steal your question here. So
okay,
I do have some thoughty fingers. Ericka, you were talking about contracts, and I think this leads into an interesting. You said once you have that policy, that's your contract. We had an interesting call this week where we were having a conversation with somebody about cyber insurance and the market space, and they presented to us another way people were kind of trying to work their way around the problem. And Matt, correct me if I'm misremembering, but warrants.
Warranties, and they're a little bit different from insurance because there's not necessarily an application process, right?
I know I want to see her perspective.
Yeah,
but warranties are usually excluded on cyber policies.
Right. So I think the issue that we ran into was someone who was curious. There's these cyber products, right? Like a product that's supposed to stop malware, right? And they guarantee that they're going to stop the malware, and they have a warranty attached to it. And they say, well, if malware happens, as long as you did all the things that were correct, which is its own nightmare, we will cover you up to. And the example I saw was $1,000 per machine up to $1 million aggregate, which sounds like $1 million, great. But when you look at that $1,000 per machine, it's like, well, but that, I'm not trying to protect a laptop. I'm trying to protect my business, right? But I'm curious, are you guys seeing, like, how is that impacting claims processes and purchase cycles? Is this something that you guys hear about where people are buying technology that they think is pre-cyber insured because it comes with a warranty?
No.
Usually if I've ever had a claim where there's been an infection that was propagated onto the network by a service provider, usually when we look at those agreements, there's mutual indemnification. So most service providers are requiring indemnification. I can't even imagine a cybersecurity company that guarantees that you'll never have an incident. I mean, that's just run, walk, don't walk, run.
You should never be listening to anybody that's guaranteeing you something is or is not ever going to happen. Because that's
first of all, Caleb put a comment up. That's just a gimmick. I couldn't say it better.
Thank you. You took the. I couldn't say it that mean.
But I do see it frequently, and I think there's a lot of misunderstanding.
Let me tell you something about that. So you have the $1,000 per machine. If something happens that renders your machine unusable. Well, what would come in that would actually render your machine unusable? Not a whole. That's not a huge cyber exposure. The exposure is what they get in, extract, manipulate, and disseminate. Not that they broke your laptop.
That's where the value is. It's not your $400 gaming computer.
Right. And here's the other thing: if you have a cyber policy that's been constructed correctly, there will be a limit in there specific to that already. There'll be, Ericka, correct me if I'm wrong, but I believe that's called bricking coverage, which would cover
for replacement.
Yeah, which would be hardware if there were a hardware problem. So that
a lot of things came to mind because and excuse my ignorance, I'm not sure. Is this a cyber policy you're referring to that is
about malware, like malware software products that say if something gets through, we'll guarantee you or whatever. But here's the deal. The other part is having a good malware product on your machine is going to be a question that underwriters ask to begin with. They're going to, if you don't have some kind of protection and if you don't take the patches when they're necessary and you can't identify when it is, you're not going to get insurance. So those things need to happen to begin with. Now, one thing going back, Matt, I wanted to mention is there are times that we're on the phone with a prospect or client, and we're also on the phone with their IT person, or maybe even their outsourced IT provider, or they say, I need to complete this application, with and somebody who really knows what they're talking about and can tell me what kind of malware we have, what kind of patches we have, what kind of MFA we have, and that's all necessary to get the quotes in most cases. But what you're talking about is pretty useless, compared to an insurance policy, a real insurance policy.
That's what I wanted you to say.
What do they say in Tommy Boy? When he goes and gets the box, the warranty's on the box. Well, why isn't the warranty on the box? That whole conversation. What does it really matter?
So I know our service providers are helping their customers through the application process, and of course we tell them, look, don't attest to things for your end customer. They need to put their own app in, right? But they do ask for advice, right? And those service providers are often the ones that need to do the thing that's required. But I know that these days there are some requirements, and I know MFA has been out there for a number of years, and now it's even more important, right? But there's some other things that are appearing on these policies that are just, you have to do this thing if you really want an automatic yes, right? So what are some of those things? You said these applications are getting shorter, so the carriers must be correlating losses around some specific criteria these days, right?
Some make or break points.
I think it varies from carrier to carrier, and I think that there are certain insurtech carriers that are relying on technology to supplement some of the things they might have asked the question about. A lot of insurance companies are still going to want to know that, number one, everything, what your systems look like. So you've kept some sort of inventory. And this goes to the CIS controls, right? But it's important to know that also you have access controls, right? MFA is important. And for whatever strange reason, I've seen lots of applications where there's MFA everywhere except admin accounts. I will never understand that. But the applications are sometimes going to get a little more intricate depending on how complicated the business is. There are still insurance companies that will, with very little information, provide insurance. And it truly just depends what you want from the policy, what kind of business you're running, et cetera.
So the admin accounts one, I can answer that because I'm a tech geek.
My gosh, I would love to know.
It's hard, and here's why. Users are just using normal apps on their computers, right? But admins have to log into all sorts of weird things like firewalls and network switches and special administrative servers. And those things can also require MFA, but it requires a huge project. You have to tie in all of those extraneous devices and services and systems into a single sign-on system. And the insurers are not asking the questions around, do you do federated login? Are you requiring that those federated systems are respecting role-based access controls? Because it would be like 10 questions long and it would be really complicated. So instead they ask.
Applications are definitely out there.
Yeah, some of them are. Some of the long forms, right, are asking questions around federated login and single sign-on. But you literally can't protect admin accounts unless you are doing all of those things. And this is why federated login and single sign-on are so important these days. It's the reason why Okta's making tons of money, hand over fist right now. But there's plenty of other products in the marketplace to do that kind of thing. And if you're a Microsoft or a Google customer, guess what? Those platforms already do single sign-on. You just have to configure it with all of your systems. So there's work there for the service provider, and they skip those things because it's easy, right? Because single sign-on's hard. It's project work, but it's important. Any other?
Thank you for that. It's been a mystery for me.
We're running out of time, but I know people love the geeky. They got the geeky questions.
Any other burning desires, or maybe we should do last thoughts?
Yeah, we can do last thoughts. So, clearly, I feel the need to just, make sure every single one of my partners has some kind of cyber navigator available to them that they can ask questions. So clearly, if an MSP is already in the business, of obtaining their own tech E&O or cyber liability policy, that agency and that carrier and that underwriter, they're going to have an interest in really supporting that MSP in supporting their end customers, because if that end customer is breached because of something the MSP done, that's going to be on the carrier's risk pool, right? So
Yeah.
that's an important relationship for a provider to put in place, and that's my takeaway.
I guess if I have a takeaway, to keep it, insurance based, I would say that it's very important to have a standalone policy. Policies are going to cover so much more than you could imagine, including when someone makes a mistake and for some reason the systems go down. Like there was an incident with, was it what's the administration that is responsible for like aviation?
FAA.
Maybe the FAA. They actually had a system failure. Everyone thought that they had been hacked and it was a system failure. That kind of thing is covered. When your provider has a loss and for, 2 days you can't use your systems because their systems are down, there's coverage for that for the time that you're down for, depending on another business. So ensure, first of all, that you're securing the fortress. Make sure you've got access controls, make sure that you are putting the controls in place that help you on your end, and then transfer the rest to insurance.
Yeah. Thank you. First and foremost, we appreciate the opportunity to talk today. The takeaway I would give is we're talking about $1 million policy limits, separate policies. Don't confuse that with that it's crazy expensive. Sometimes it's hard to, get the policy to, especially if you're in the tech firm, we have hurdles and underwriting hurdles to go through. The right agency can help you with that, but don't take that as, it's going to cost me as much as my work comp costs. It's going to cost as much as my general liability costs. There are a lot of great cyber policies out there right now that are $1 million limits that are less than $2,500. It's a matter of getting it right is what it comes down to. But thanks again. We really appreciate the opportunity to come on.
We're really happy to have you guys. I guess if I had a takeaway, it would be don't try to lean on a half solution like a warranty. Go through the process of protecting your fortress, but really identify where your posture is and where you want it to go, and then do things the right way. Because if you don't, you're going to get burnt down eventually. So, thank you guys for joining us. Awesome.
Thanks for having us.
Signing out here.
Bye, everybody.
Goodbye.
Oh.